to get more now on the problems facing the Eurozone, actually. A bit of a gear shift for you here. We've had more talk that Greece will have to restructure its debt, remember, and even claims that it may quit the euro. But we've also just seen the strength of Europe's core with record German export numbers. I'm joined now by an economist with more than 15 years' experience. Gilles Moec is the former head of the International Economics Division at France's central bank. These days, he's a co-chief European economist at Deutsche Bank, joins me live from the company's London offices. Thanks very much indeed for speaking to us. So I actually wanted to start by asking you about these record export numbers that we've had from Germany. It seems as though particularly when you see what's happening in Greece today with ongoing fears of restructuring, I mean, this divergence within Europe continues.
Yeah, divergence in Europe continues. At the same time, it's immensely positive for Greece and for the periphery in general that core Europe does good for at least two reasons. First of all, as long as core Europe is feeling well, it probably makes it a little bit more generous when dealing with its periphery. And second, the periphery usually is quite Eurocentric, meaning that they sell a lot to other European countries. They don't sell that much to emerging areas. So it takes quite a bit of demand from the rest of the Eurozone, and namely from countries such as Germany and France, to actually lift them up. And this is what we've seen actually last year in countries such as Spain, for instance, where we've seen a fairly strong export performance because they were able to benefit from traction from the rest of the Eurozone. So yes, it's diverging, of course, but it's still very positive for everyone.
Could a strengthening euro create problems for core Europe and, by extension, the periphery?
Yes, it's very much one of the biggest risks at the moment, and probably explains why the ECB is getting a bit more cautious in its communication. We are getting very close to the kind of territory where even the most competitive nations in Europe start to struggle, and we know that even in Germany, for instance, when the exchange rate gets close to 150, things get a little bit less easy, even if it takes time to materialize and have an impact in the figures. So yes, it's definitely one of the issues that need to be monitored. But fortunately, we've had a central bank which has already factored this factor in, and which is probably ready to be more pragmatic than what we thought they would be just a few weeks ago.
Now, we've had a meeting on Greece's debt position, of course. The consensus seems to be amongst many analysts, experts and officials themselves that this is a position that is simply not sustainable. So what are the options for Greece right now, Gilles?
Okay, so let's try to list them from the quasi-delirious to what is probably likely. What is delirious is Greece exiting the monetary union. I definitely don't think it's on the cards, and was quite surprised actually to see it coming back on Friday. Restructuring in the sense of ugly haircuts, I still don't think that there's any kind of serious thinking about this in the Eurozone at the moment. So I guess that there are one thing immediately that Europe has to find an answer to, and that's how we bring back Greece onto the market at the beginning of 2012, because under current conditions it's just not doable. So Greece needs extra lending, that's for sure, and I guess that the thrust of the discussion on Friday night was about the organization of this extra loan and how it could be sold in a way to core European countries, hence this idea that it would have to be backed by more efforts from Greece and possibly in the form of speedier privatizations. But even if we deal with 2012 and the beginning of 2013 in terms of helping Greece back into the market, there still remains the question of the sustainability of the outstanding level of debt itself, and this may gradually let a consensus emerge on the idea of rescheduling, but in my view it would be a very orderly rescheduling, and they clearly don't want to rock the boat at this stage.
And when you speak about an orderly rescheduling or essentially extending the length of time for those debt repayments, how does that need to be handled in a way that it doesn't hurt the banks?
Well, first of all, it's also a question for the regulators. If you reschedule, if you don't haircut, in a sense, you don't touch the principle of what is being held on the banking book of banks, so it makes things easier not to have to recognize some of the losses. But if at the same time we have a rebate on the interest rate, then we have normally an impact on losses on the P&L. And that probably calls for some form of involvement of the European regulators, banking regulators, but also probably insurance regulators also, to get everyone on board, which gets me to the idea that even if clearly this is something which is now being discussed almost openly at the European level, I definitely don't think that this is imminent, simply because technically it's going to take a lot. It's going to take a lot of discussion in Europe. It's going to take a lot of people around the table to make this possible.
Certainly. Thanks very much indeed. Great to get your analysis. Gilles Moec, Co-Chief European Economist, Deutsche Bank. Good to talk to you.